Welcome back to Crypto BCI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. It really does help. Now, before we get into this, I'd like to know where you guys are watching from. I'm in Colorado. Comment down below and tell me where you guys are watching from. Now, let's get into this. We're sitting at $2.87, trading with the range of $2.79 to $2.88. We're up about 1.5% on the day. We're holding above that $2.80 mark really well. We'll see where we go from here, but we need to break through that $3 mark and push through $3.30, $3.33 in order to see any kind of significant breakout. It is clear that all the FUD against XRP all these years has been created to create doubts for retail to sell XRP. It is clear that XRP will be a very big liquidity tool on which the world will depend. Don't be fooled. Nothing will stop XRP. And breaking. U.S. Treasury just bought another $2 billion of its own debt. It's pretty sad when your biggest buyer is your own Treasury buying up its own debt. I'd like to know how that works. Well, we do. They just print off more money. The SEC and CFTC just greenlit spot crypto trading in the U.S. For the first time ever, America's two most powerful market cops are joining forces and opening the door for spot trading of assets like XRP on registered U.S. exchanges. This is massive, and it changes everything. The bombshell announcement. On September 2nd, the SEC and CFTC dropped a joint statement. Registered U.S. exchanges can facilitate trading of certain spot crypto products. Paul Atkins, SEC chair, market participants should have the freedom to choose where they trade spot crypto assets. Translation, the U.S. just told Wall Street, the crypto table is open. Why is this so historic? For years, the SEC and CFTC fought turf wars, confusing markets, choking innovation. CFTC acting chair Caroline Pham didn't hold back. Under the prior administration, innovation was not welcome. That chapter is over. Now they're united, and the U.S. is officially moving to make America the crypto capital of the world. What this means for XRP? XRP has one thing most altcoins don't: legal clarity. Courts already ruled XRP itself isn't a security. So spot trading of crypto assets is now allowed on registered U.S. exchanges. Guess which token is first in line for institutional flows? Enter the exchanges. With the SEC and CFTC's blessing, the NYSE and CBOE style exchanges can list spot crypto products. ETFs become easier to approve. Compliance teams get green lights. This isn't just Coinbase anymore. This is Wall Street grade venues plugging in XRP. The broader crypto signal. The U.S. is finally doing what Asia, Europe, and Latin AM already sprinted ahead on, giving regulated access to crypto. And when that happens, liquidity floods in. Think pensions, hedge funds, corporates, billions on the sidelines get permission to move. The timing couldn't be hotter. All this drops while XRP ETFs are under SEC review, decisions in October. Ripple is chasing a U.S. banking license, and stablecoin adoption for RLUSD and BBRL is exploding globally. Institutional clarity plus spot access equals XRP's perfectly positioned. The scandalous twist. Just 18 months ago, the SEC was dragging Ripple through the court, calling XRP illegal securities. Now the same agency is co-signing spot crypto trading with the CFTC. The hypocrisy is staggering, but the XRP army was laughing last. A new era starts now. The SEC and CFTC didn't just drop a joint memo. They flipped the switch. Spot crypto trading on U.S. registered exchanges means XRP finally gets the playing field it's been waiting for. The floodgates are creaking open. The question is, are you ready when the money rushes in? If you found this information valuable, helpful, or even entertaining, please share, like, subscribe, and comment down below. The Finastra, Ripple, and Thunes collaboration finds its way into 125 plus countries. Thunes, a global payments infrastructure provider with the reach into over 125 plus countries and 3 billion banked and unbanked users, has officially teamed up with Ripple. This adds direct RippleNet corridors into Africa, Southeast Asia, and Latin America, connecting to mobile wallets, banks, and alternative payment methods. It expands Ripple's ODL, on-demand liquidity, into markets that Swift struggles to serve, essentially fusing the institutional corridors of RippleNet with the last-mile reach of Thunes. Ripple, Finastra, and Thunes bring scalable cross-border payment rails that rival and bypass Swift altogether. Think about it. If the SEC approves all spot XRP ETFs by October, the path to $50 by December 2025 isn't hopium, it's math plus market structure. Let's dig into this and see what we can find out. The filings are real, live, and stacking. We're not talking rumors. At least 6 to 7 major issuers have active S1s or amendments in front of the SEC. Bitwise, 21 Shares, Wisdom Trees, CoinShares, Canary Capital, and Franklin Templeton, which filed a dedicated Franklin XRP ETF S1. A cluster of amended S1s hit after the Ripple SEC dismissal, signaling go time positioning. Decision calendar, October window. The SEC has pushed decisions like Wisdom Tree's XRP ETF to late October 2025, with other issuers in the same review cohort. a synchronized green-red-like moment. If approvals land in that October window, Q4 launch is in play. Regulated framework tailwind. The SEC has begun publishing crypto ETF guidance, and exchanges are pushing generic listing standards for crypto ETPs, shortening timelines and normalizing approvals beyond BTC and ETH. That's the policy backdrop you want heading into October. The first month flow, base case, 5 billion plus. Independent market desk peg first month spot XRP ETF inflows at around 5 billion plus before the reflexive chase. That's a serious demand shock to the supply that's partly escrow locked and concentrated. Institutional on-ramps are already built. CME launched XRP futures May of 2025, and Coinbase derivatives listed CFTC regulated XRP futures on April 2025. The same runway BTC and ETH had pre-ETF. This matters. Futures liquidity plus spot ETF is the standard playbook. Supply mechanics favor violent repricing. 35 to 36 billion XRP remain in escrow under pre-programmed releases. Much of the circulating supply sits with large holders and exchanges. Translation, effective free float and is thin relative to potential ETF demand. Thin float plus billions in net buys equals air pocket up moves. Keep in mind, this is not financial advice. It's only educational purposes. Scenario math. Assume 5 to 8 billion net spot ETF inflows by late November, multiple issuers. Add basis futures ARB plus RIA rebalancing and corporate treasuries. Another 5 to 10 billion potential by year end. Against a circulating base of 59 billion XRP with meaningful portions illiquid, the price elasticity required to clear 10 to 18 billion of net demand can be extreme, historically producing multi-X moves in assets with deeper floats than XRP. Why $50? It's plausible in Q4. ETFs convert sideline mandates, RIAs, wealth platforms, pensions into rule-compliant daily settled spot demand. With October approvals, 2 months of compounding flows plus year-end window dressing, FOMO can push XRP into a reflexive regime. Note, BlackRock sitting out doesn't block price. 6+ other issues is sufficient. The kicker, infrastructure narrative. This isn't just exposure. It coincides with XRP's institutionalization arc, CME futures and derivatives liquidity, and a post-litigation market that finally treats XRP as a settlement asset, not a sideshow. ETFs are the distribution layer for that thesis. The bottom line, if all spot XRP ETFs clear in October, the Q4 liquidity flywheel inflows, higher price, larger AUMs, and more inflows can ignite. And that setup, $50 by December 2025, stops being a meme and becomes a path, not a promise. I'll be tracking every S1 tweak, SEC clock, and market depth in real time. And XRP haters are going to lose sleep over this. Analysts are now valuing XRP like a stock, a currency, and a commodity, because it's becoming all three. The narrative's shifting. Real value is forming. Don't wait for the headlines. You'll be priced out if that happens. XRP's reprice isn't a matter of if, it's just when. And last up, just like XRP, very few wanted to believe until the proof was undeniable. The same dynamic is playing out with the Zebec Network today. What sets Zebec apart is that it isn't chasing speculation. It's building compliance-first settlement rails. SOC II compliance achieved, MiCA approval pending, FCA progress underway, and ISO certification targeted. On top of that, Zebec is already integrating with payroll providers, card networks, and fintech partners, creating the programmable infrastructure retirement accounts, prize, and sovereigns must use to stay competitive. The disbelief always comes first, the explosion of adoption next. By the time the market catches on, the opportunity window is gone, and ZBCN isn't just another token. It's positioning as a powerful player in the entire blockchain sector. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.